Okay, so today we're really digging into Etoro. We've got their Q3 2025 financial results right here. Got the press release, earnings call notes, investor commentary, the whole stack. We want to figure out what's really behind this, you know, pretty explosive quarter they've had.
Absolutely. And when you first look at the numbers, the growth just jumps out at you year over year, I mean. Right. Like net contribution, that's their core revenue stream. Basically, it's up a very solid 28%. Landed at $215 million.
Which is great, but the one that really catches the eye, I think, is the assets under administration, the AUA.
Oh, definitely. That number just skyrocketed, up 76% to $20.8 billion. That's a huge amount of assets on their platform.
It really is. And, that kind of jump in AUA, that's what analysts really focus on. It tells you capital isn't just coming in, it's sticking around, it's growing.
And they're keeping the users needed to fuel that, right? Funded accounts were up too. Yep, up 16% year over year, so 3.73 million funded accounts. That's a solid user base driving that capital.
Okay, so those are the big headline numbers. Impressive stuff.
They are. But like you said, we want to get past just the headlines in this deep dive. Our mission here is to really understand the strategy, the how behind it all. How did Etoro build this momentum? We need to look closely at, I think, two main things. How they executed on those four strategic pillars they talk about, and that big corporate finance news.
The share buyback.
Exactly. That $150 million share repurchase program, that signals some serious confidence from inside the company.
Yeah, and that strategy, it definitely seems to come straight from the CEO, Yoni Asaka. He was pretty clear about focusing on those four key pillars.
Trading, investing, wealth management, and neobanking.
Right. And he argues that putting all that together, plus their whole social investing thing, creates this, what did he call it, a powerful flywheel.
The powerful flywheel that drives increased engagement, that's the quote. And it's that flywheel concept we really need to break down.
Okay, let's start with the core financials then. How healthy is this growth really?
Right, because revenue growth is one thing, but profitability is key. And they delivered there too. Looking at Q3 2025, their net income using standard GAAP accounting was up 48% year over year.
$57 million. That's pretty good.
It is. But I often like looking at adjusted EBITDA for a cleaner operational picture, stripping out some non-cash stuff.
And how did that look?
Also very strong. It jumped 43% year over year to $78 million. That shows real operational efficiency.
So they're managing costs well alongside the growth.
Exactly. The CFO, Marin Shani, he pointed that out, said the results show the strength of diversified revenue streams across segments and geographies, and importantly, disciplined cost management. They're making money effectively across the board, not just burning cash to grow.
And it seems like that momentum carried on past Q3 as well. They gave some October numbers, right?
They did, yeah. Preliminary data for October 2025, just to show things weren't slowing down.
So funded accounts kept climbing.
Yep, hit 3.76 million. That's up 17% year over year. So slightly accelerated from Q3 even.
And AUA, did it hold up?
Pretty much held steady from the end of Q3. It was $20.5 billion in October, still up around 73% year over year. So that massive gain is sticking.
Okay, but what about actual activity? Are people just parking money there, or are they actively using the platform? The October data seemed interesting there.
Yeah, the activity metrics for October were pretty telling. Total number of trades soared 53% year over year, 62 million trades in 1 month.
Wow. That's a lot of clicking.
It is. And the crypto side of things was even more dramatic. Crypto trades were up 84% year over year, hit 5 million trades in October.
84%. That's huge.
It really is. But here's the crucial part, I think. It answers the question, are people just trading more often, maybe smaller amounts, or are they actually committing more capital?
Right. The size of the trade.
Exactly. And the data shows they're committing more. The average invested amount per trade went up significantly. Overall, it was up 26%, averaging $361 per trade.
Okay, that's a decent jump.
It is. But look at crypto specifically. The average invested amount per crypto trade, up a massive 52%. It hit $320.
52% bigger trades on average for crypto.
Yeah. That suggests higher conviction from users. They're feeling comfortable putting, more serious amounts into each crypto trade on the platform. And that comfort, that comes back to the product.
Okay, so that makes sense. The strong financials, the growing user base, the increasing activity and trade size, it all points back to the product innovation across those four pillars. But let's just pause on that flywheel idea for a second. We listed the four pillars: trading, investing, wealth management, neobanking. How do they actually connect to drive that huge AUA growth? Sounds good, but what's the mechanism?
That's really the key, isn't it? Synthesizing how it works. So think of it like this. Pillar 4, neobanking, that's Etoro money, is sort of the entry point for everyday cash. They use incentives, like the stock-back rewards on card purchases, to get your regular money into the Etoro ecosystem.
Okay, so the cash comes in through the banking features.
Right. And once it's in the ecosystem, it's immediately available for Pillar 1, trading. Frictionless movement of capital.
And the new 245 trading helps there, I guess. Keeps people engaged anytime.
Exactly. That continuous trading encourages frequent activity. Then, that activity can be shared, discussed, copied. That's Pillar 2. Investing, the social layer. It builds community and stickiness.
Okay, so banking gets the cash in, trading provides the action, social keeps people there. What about wealth management?
That's Pillar 3. As users build up assets, maybe through successful trading or copying, they become candidates for the premium wealth management services. Things like the Etoro Club subscription or those localized savings products like the Cash ISA in the UK. That pillar captures the long-term, higher-value assets.
Got it. So it's a cycle. Banking captures cash, trading provides utility, social enhances retention, wealth captures long-term value.
Precisely. It's designed to capture the user across their whole financial journey, from daily spending to long-term saving and investing. That's how you engineer that kind of AUA growth. It's not just one thing, it's the integrated system.
Right, building fences around the user's capital, essentially.
Yeah.
Makes sense. Okay, let's walk through the pillars then, starting with Pillar 1, trading. The focus seemed to be on access.
Absolutely. Accessibility and removing friction. The biggest news there was definitely the continuous weekday trading. 245 trading for all S&P 500 and NASDAQ 100 stocks.
That feels like a big deal for a global platform.
It is huge. If you're a user in Asia or Europe, you don't have to wait for the U.S. market open anymore to react to news. You can trade when it's relevant to you. They also expanded futures in Europe and opened up access to more Nordic stocks, Stockholm, Helsinki, Copenhagen, just broadening the reach.
So more things to trade and more time to trade them. What about Pillar 2, investing? This seems to be where the social and AI aspects really come in.
Yeah, the social community is a core part of their identity. They mentioned over 4,000 investors are now in their Pro-Investor program, used to be called Popular Investor, across 70 countries. That program incentivizes sharing successful strategies.
But the AI angle seems newer and potentially very powerful for keeping high-value users.
Definitely.
Yeah.
They launched new AI tools, letting users customize strategies, build their own dashboards. It adds a layer of personalization.
And they gave that specific stat about Tori, their AI analyst.
Right. More than a third of their club members, so their premium tier users, are actively using Tori for personalized market insights. That's significant adoption.
That's a really sticky feature for your best customers.
Exactly. It gives them a reason to stay within the eToro ecosystem for sophisticated analysis.
Okay, Pillar 3, wealth management. This felt more focused on long-term savings and localization.
Yes, long-term capital and tailoring products to specific markets. They launched the Etoro Club subscription, which bundles exclusive wealth tools, and the localization is crucial. Offering a tax-efficient Cash ISA in the UK directly taps into a major savings market there. Same idea with integrating Spaceship in Australia for superannuation products.
So moving beyond just active trading into core savings vehicles.
Right. These are tools people use for retirement, for major life goals. It deepens the relationship.
And finally, Pillar 4, neobanking with eToro money. You mentioned the incentives already.
Yeah, the localization push was big here too, launching in Australia, for instance. And those incentives are clever, earning stock back on card spending or even for depositing crypto.
It really ties daily financial activity back to their investment portfolio. Closes that flywheel loop, like you said.
It does. And the engagement numbers show it's working. 1.75 million eToro money accounts and debit card issuance. It grew 2.4 times just from Q2 to Q3.
Wow, 2.4x quarter on quarter. People are clearly signing up for and using the cards.
It suggests real buy-in. People are starting to use eToro not just for investing, but for managing their money day to day.
Okay, so the 4 pillars seem to be working together effectively. Let's zoom in on one area that seemed to get a lot of focus. Crypto, particularly the U.S. push.
Yeah, the U.S. crypto strategy is pretty aggressive and seems to be paying off. They said new funded accounts from the U.S. just year to date have already beaten the entire number from 2024.
Already surpassed the full prior year. That's rapid growth. What drove that?
Yeah, a huge expansion in what U.S. users can actually trade. They went from offering just like 3 crypto assets to 110. A massive difference.
Okay, huge product expansion. Anything else?
Yes, they launched staking for some major coins, Cardano, ADA, Ethereum, ETH, Solana, SOL, so users can earn passive yield on their holdings. And importantly, they finally brought CopyTrader to the US. That lets US users tap into the whole social trading aspect, which is core to eToro globally.
So bringing the full Etoro experience to the U.S. market, basically.
Pretty much. And they're looking ahead, too. They talked about launching a proper crypto wallet.
Right. Planned for the next few quarters.
Oh.
But it sounded like more than just storage.
Definitely. They framed it as a gateway to Web3 utilities. Things like participating in blockchain-based prediction markets or lending protocols, even tokenization.
So building the infrastructure for users to actually do stuff with their crypto beyond just trading.
Exactly. Moving towards a more integrated digital asset ecosystem.
And do the financials back this crypto push-up?
I'd say so. Look at interest-earning assets, that's capital on the platform earning yield, which includes staked crypto. That hit $8.7 billion in October, up 55% year over year.
And money movement.
Total money transfers, which includes crypto deposits and withdrawals, were $1.4 billion in October. That's up a massive 116% year over year.
Wow, double the money flow compared to last year.
Yeah. It strongly suggests that building out these crypto and Web3 capabilities is attracting significant capital flow onto the platform.
Okay, that covers the operational strategy and the crypto focus. Let's pivot to that other big piece of news, the share repurchase program.
Right, the $150 million authorization from the board, that's a significant corporate action.
A very clear signal of confidence from management, you'd have to say.
Absolutely. And they're not waiting around. They plan to kick it off with an accelerated share repurchase, an ASR, for about $50 million right away.
Why the ASR? Just speed.
Mostly speed and certainty, yeah. It lets them lock in the repurchase of a decent chunk of shares quickly, rather than trying to buy them slowly on the open market over time.
Okay, so management obviously thinks the stock is cheap. They always say that, though. What in these results actually backs up spending $150 million on their own shares right now?
Well, I think you can point to three things we've discussed. First, the profitability. That 43% jump in adjusted EBITDA means they actually have the cash flow to do this comfortably without starving the business.
Okay, they can afford it.
Second, the underlying business momentum, especially that massive 76% AUA growth. It signals a really strong, sticky future revenue base. They're not just growing users, they're growing valuable long-term assets.
Right, the flywheel seems to be working.
Exactly. And third, connecting those two dots leads to the classic buyback rationale. The company feels its prospects are strong. The market perhaps hasn't fully priced that in yet, so buying their own stock offers a great return on capital. It's a strong signal about their long-term belief.
And they also mentioned future flexibility, something about M&A.
Yeah, that was an interesting point. They explicitly said the program gives them flexibility for potential future strategic moves, including M&A.
How does a buyback help with M&A?
Well, having those repurchased shares held by the company treasury shares means they could potentially use that stock as currency in a future deal.
So instead of paying cash or issuing brand new shares to acquire another company, they could use these repurchased shares.
Exactly. They called it an effective transaction currency. It gives them another tool in the toolkit for potential acquisitions down the line without diluting existing shareholders further or depleting cash reserves as much.
Okay, interesting strategic angle there. So let's wrap this up. Summing up this deep dive on Etoro's Q3.
Well, I think the main takeaway is that the strong performance wasn't accidental. It looks like the result of, really deliberate execution across those four strategic pillars.
Yeah, the 245 trading, the AI tools, the localized banking and wealth products, they all seem to be feeding into that flywheel concept and creating a more captive ecosystem.
And that execution directly fueled the strong user growth, the retention boosted by things like the spaceship acquisition in Australia, we should add, and ultimately that huge 76% jump in AUA.
The investment in the platform, especially crypto and AI, seems to be paying off in terms of engagement and attracting serious capital.
Definitely. The innovation seems directly linked to the financial results and the diversification of revenue.
Which leads us to our final thought, something for you, the listener, to chew on. They explicitly tied that $150 million buyback to future strategic flexibility, specifically mentioning M&A and using shares as transaction currency.
Right.
So the provocative question is, with all this momentum in crypto, Web3 infrastructure, global neobanking, what kind of company might they be looking to acquire next? What gap are they trying to fill?
And how exactly will they use those repurchased shares to make that happen? Could it be a crypto infrastructure play, another regional neobank, something in AI?
That's the big strategic question mark, isn't it? What's the next move that this buyback enables? Definitely something worth watching closely.